Hello everyone. In this latest video by Africa Rebound, we explore Indonesia's remarkable economic journey since the dawn of the 21st century, as a potential model for Africa's developing economies like Nigeria, Ethiopia, Kenya, and others. At the dawn of the new century, Indonesia emerged from the ashes of the 1997 Asian financial crisis, which had shrunk its economy by 13.1% in 1998. Fast forward to today, and this archipelago of over 17,000 islands has transformed into Southeast Asia's largest economy and a rising global player. Indonesia, the world's fourth most populous country, has made significant strides in economic development since the beginning of this century. From a country plagued by corruption and economic instability to a thriving democracy with a rapidly growing economy, Indonesia's transformation has been remarkable. This narrative of Indonesia's economic development is one of resilience, growth, and transformation, highlighted by significant milestones and data that underscore the country's progress over the past 25 years. Let's explore the milestones, challenges, and data-driven progress that define Indonesia's recent economic journey. If you're new to this channel, please consider subscribing for similar insights on economic growth and development. In the aftermath of the 1997 Asian financial crisis, Indonesia embarked on a path to recovery. In the year 2000, the nation's gross domestic product was approximately $165 billion, with a growth rate of 4.9%, signaling a departure from the economic downturn of the late 1990s. This period was characterized by efforts to stabilize the economy and rebuild investor confidence. In 2004, Indonesia implemented a series of economic reforms aimed at promoting investment, trade, and economic growth. These reforms included the establishment of the Investment Coordinating Board, or BKPM, and the implementation of the 2007 Investment Law. The mid-2000s witnessed sustained economic expansion. In 2007, Indonesia's GDP reached $432 billion, reflecting a growth rate of 6.35%. This upward trajectory continued into 2008, with the GDP increasing to $510.23 billion, despite emerging global economic challenges. The 2008 global financial crisis posed significant challenges worldwide. Indonesia, however, demonstrated resilience, maintaining a positive growth rate of 4.63% in 2009, with a GDP of $539.58 billion. This resilience was attributed to prudent fiscal policies and a strong domestic market that cushioned the impact of external shocks. So, in the 2010s, infrastructure development really became a key priority for the Indonesian government. Between 2010 and 2020, Indonesia invested over $300 billion in infrastructure development, including roads, bridges, ports, and airports. For instance, the 1,167-kilometer Trans-Java toll road, which was completed in 2018, cut travel time from Jakarta to Surabaya from 24 hours to just 10, seriously boosting logistics efficiency. By 2024, the government had constructed 2,700 kilometers of new toll roads, 50 new ports and airports, and 1.1 million hectares of irrigation canals, which significantly enhanced connectivity and agricultural productivity. Manufacturing has also played a crucial role in Indonesia's economic development. In 2020, the manufacturing sector accounted for over 20% of Indonesia's GDP, with textiles, footwear, and electronics being major export industries. Indonesia's manufacturing sector has been driven by a combination of factors, including a large and growing domestic market, a skilled and relatively low-cost workforce, and a favorable business environment. Indonesia's 2020 Omnibus Law streamlined business regulations, attracting $47 billion in foreign direct investment in 2022, which was a 44% jump from the previous year. Key sectors like nickel processing really thrived after a 2020 export ban on raw nickel, which spurred $30 billion in smelter investments and positioned Indonesia as a global hub for electric vehicle batteries. At the same time, poverty rate saw a notable decline. From 1999 to 2019, the poverty rate was reduced by more than half, falling to less than 10% before the COVID-19 pandemic. This achievement really underscored the effectiveness of targeted social programs and economic policies aimed at inclusive growth. The onset of the COVID-19 pandemic in 2020 disrupted global economies, and, well, Indonesia was no exception. The country experienced a contraction of 2.1% in its GDP, which stood at $1.05 trillion, marking its first recession in over 2 decades. However, the government implemented measures to mitigate the impact, including social assistance programs and support for small and medium-sized enterprises. By 2022, Indonesia's economy rebounded with a GDP of a whopping $1.3 trillion, driven by the easing of restrictions and a surge in exports. This recovery continued into 2024 with a GDP of $1.35 trillion, as reported by the World Bank. Indonesia's export sector has been a significant contributor to its economic growth. In 2022, the country's exports reached a record high of $291 billion. The primary destinations for Indonesia's exports in 2023 included China, the USA, Japan, and India. These markets collectively played a crucial role in sustaining Indonesia's trade performance. Indonesia's digital revolution has also reshaped its economy. Startups like Gojek, which was founded back in 2010, and Tokopedia, launched in 2009, fueled a tech boom. By 2024, Indonesia's digital economy hit $90 billion, with e-commerce making up 52% of all transactions. A 2023 report by Google, Temasek, and Bain & Company projects this sector could reach $366 billion by 2030, driven by 213 million internet users, the fourth largest online population in the world. Indonesia's economic growth has been very impressive. According to the World Bank, Indonesia's GDP growth averaged over 5% per year between 2000 and 2024. In 2024, Indonesia's GDP reached $1.35 trillion, up from just $174 billion in 2000. It is noteworthy that Indonesia's current GDP is 4 times bigger than that of Nigeria. Nigerian economic managers should ponder over this, because in 1960, Indonesia's GDP was a fraction of Nigeria's. Looking ahead, Indonesia aims to strengthen its economy by enhancing human capital and competitiveness in the global market. The government's 20-year development plan, which runs from 2005 to 2025, emphasizes these priorities. In conclusion, Indonesia's economic development progress since the beginning of this century has been nothing short of remarkable. Through economic reforms, investments in infrastructure and human capital, and a focus on poverty reduction, Indonesia has transformed itself into a dynamic and rapidly growing economy. Looking ahead, Indonesia is betting on some pretty ambitious projects. The $32 billion new capital city, Nusantara, slated for completion by 2045, aims to redistribute economic power beyond Java. The government also targets 7% GDP growth by 2025 through downstream industries, digitalization, and human capital investments. From crisis to comeback, Indonesia's 21st century journey reflects resilience and reinvention. If Indonesia can do it, so can African nations. And why not? Thanks for watching. If you found this video interesting, please share to spread the insights. And if you're new to this channel, please consider subscribing for similar insights.